Good morning, everyone. Welcome to Tuesday, May 3rd. Let's see what we got cooking in the weird kitchen this morning. So I drew some volume profiles going back to the 26th so we could see where, as they say, all the bodies are buried. And we came right up into this 4180 area where there's a chunk of supply there. Um, these are areas that we could expect resistance. Hey, Seek. Patrick, good morning. Hey, Mark. Evie. Whole crew's here this morning. So yesterday we had a really, um, this market has not had any sort of leadership, serious buying institutions that want to buy stock and hold it for a while because there's a Fed meeting coming up and there's uncertainty. And when we have that kind of situation happening, we will do a lot of what they call looking for the bid. And unfortunately, for people, they get sucked into a sense of comfort the last 3 years have been just completely a really solid bull market. Uh, and we've had, a lot of trouble with trying to buy the dip lately, right? And when you try and buy the dip in these markets, they're very difficult to do because if you are buying the dip, you got to sell, right? You have to sell into strength because this is the first time in years now that we actually have supply. We have a two-sided market, right? So what is a two-sided market? A two-sided market is when you have sellers. When this market was doing this move up, every time it would dip, it would buy and go higher, right? Because if you look to the left here, right, there was nothing to the left once you got over this high. Once you got over 3,400, there was nobody with a cost basis. Now, you guys, if you're a trader, you should know what a cost basis is, okay? Right? You buy one share at $1, you buy another one at 50 cents. Now you got a cost basis of what? 75 cents, right? Everybody should know what a cost basis is, right? So when people have a cost basis, not all of the people who have a cost basis at higher levels will sell. Why is that? Because all human beings think and have different trading ideas, models, thesis, all that sort of thing. So as the market went up to 4,800, there was nothing here. There was nothing but clean, pure white snow. There was this uncharted territory. When the market broke 4,800 and came down, as soon as we got to 4,405, we had, what is this? Candle traders, what you need to do is you need to look at markets and you need to look at inventory. Even if you look at a stock, right? If you look at a stock, all you got to do is look to the left of the stock and you know you've got inventory, right? Here we have, what is this thing? This is the SPY. Here, I'm going to show you really quickly. Let's look at Crabapple, right? So all you got to do is look to the left and you'll know, what is this? This is trading. This is time, right? This is time and volume spent over a level, which means you have supply over a level. Hey, Len, which means that you're going to have resistance when you get to those levels, right? So this is the first time in years now that we have had resistance. That's why these markets sell off, bounce, and sell again, because they get into areas where there is supply, okay? And that's how you're supposed to look at a candle chart, right? Formations and all of that stuff, that's great. I got nothing against that. I won't disparage any of that. But a chart is a sales chart. The product that the people are selling is what the chart is of, right? So Apple, they're selling Apple stock. It's a sales chart of Apple. Where are people buying it? Where are people selling it? Where are they going to buy the stock, right? Because what is the object of a stock market? It is to bring something in to sell at higher price. If people do not pay higher prices, you put whatever it is you're selling on sale and mark down the price. Just like when you go to Best Buy or Walmart or any store, if they have inventory, which is stuff, oh, come on, Tony. Okay. All right. I'm just stay with the simple stuff, Tony, right now. Stop thinking about shorts right now. Okay. Just don't worry about the shorts right now. They only matter in a very small time frame. Okay. I'm talking about trapped longs. What is supply? When you go to a store, Tony, and they got 1,000 TVs for sale and they've only sold 25, there's no short there, right? You with me? Are you there? Okay. It's a market. You've got to start thinking of the market as a market where you bring in goods to sell at a higher price, right? That's why they don't call it the stock hot tub, right? It's a stock market. It's a futures market, right? So there is supply. So what do you do when you have too much supply of something and you have a store? You mark down that supply, right? So we looked into this area. There was a cost basis here where people had a cost basis from 41.24 to 42.29. The market sells off into that cost basis consistently. Yesterday, we broke that cost basis. Why did we break that cost basis and come to 40.54? Hey, Raj, why did that happen? Because you have inventory which is larger than what we previously had. Now, I'm going to stop here because this is really, really important. Does that make sense to everyone? Does everybody understand what I'm talking about? Because in order for us to trade, this market's going to be very, very difficult to trade going forward. It's not going to be easy. So it's very, very important that you understand the concepts that I'm talking about, right? And then you can develop your trading around that. So I'm just going to pause for a second. I'm going to let you guys ask questions. There is no such thing as a stupid question. Don't be embarrassed, right? Don't just ask away, because if you understand that there is supply, right? Right? If you understand that there is supply, you will be able to manage your expectations when you're trading. And things like what happened yesterday are not going to catch you off guard. And things that happened yesterday in the afternoon are not going to catch you off guard. Right? Exactly, Dan. Because why is that? Right? Because we took out this swing low here. You see that low? There's a swing low at 40.84 that we took out. Right? These lows are what hold this product up. Right? Yeah, let's I'm sorry. We're not going to talk about the VIX and all that stuff because it's not pertinent right now, right? Keep it simple. I don't want to get people confused, okay? So it's very, very simple how markets work. You don't need to go and talk about all sorts of other things. Supply and demand, and I'm going to just drill this into your heads, okay? And Dan, there are other time frame sellers, but it's not like BlackRock and those kinds of companies, right? Right? So we have to understand, right? It it is some other time frame. It is a medium term time frame seller, right? Most of this, right, is momentum trading. The flush, okay. The other thing too, right, Yeah, exactly, Norman. The other thing too is if it had been larger, very long time frame sellers, the market would not have found a bid at 40.54. Okay? Because what I told people about when we came down here, what I was worried about is we broke 41.24, 41.36, and if we took out these lows, our next stop is 39.55. We would have gone to 39.55 yesterday had there been size selling, right? So this was momentum traders who didn't get out at month end, coming out of the stocks, coming out of the ES, right? And because otherwise we wouldn't have looked below 41.36 and closed above it. We closed at what, 41.46 yesterday? We got all the way up to 41.66. We moved 100 ES points in an hour. Okay. You guys got to think a little bit more like tactically, right? Everyone's just used to trading levels and charts and RSI and whatever you're using. But there's a business that is creating the chart that you guys are trading. So if you kind of understand that business, right? Well, it's actually the picture. It's not the bigger picture, Adrian. It's actually the picture, right? It's like if you're trying to work on a car and you don't understand how an engine works, right? And you're trying to take off the wheels to replace the spark plugs. That's how most people trade. They focus on all the wrong things, right? Should be easy, right, Dan? Right? So it's the picture. It's the only picture. The only picture is this market still has limited supply, right? There's a reason for that, right? If you take a look, you got to go look at things like, I mean, I always use Apple, right? It's really easy to use, right? How do you sell 1 billion shares of Apple? How would you sell 3 billion shares of Apple when the stock only trades under 100 million shares a day? Does that make sense to you guys? Now, we don't have, why are the ranges so big? They look scary, and they are scary to trade because there is no investment money in the market currently, right? Because those investors who bought those big positions bought them at a lower cost basis, right? So they are just sitting on them and they have a 30-year time frame, right? What does OTF mean? Other time frame. What does other time frame mean? Right? It's the time to hold an investment, right? That is investment money. That's not trading money, right? So, all right, now that I've lectured you about that, what we have to worry about now is when we're trading this market, there is not much liquidity in it, okay? Which means that large orders will move this market very, very hard. And you saw that yesterday, right? You saw that really, really, yesterday we came down and we traded, and that K low went to 40.56, right? And we ran out of supply down there. We have good access in K period, right? We have good access in K period, right? Went down to our 56, and then L period nowhere near the low of K. Look at all of that volume. This is absorption of volume by size traders who got a hell of a deal, undervalue, then back into the value of yesterday. Our point of control time-wise is up here. And then M, of course, ripped, and we almost took out the previous day high, right? Exactly. Everything is rotational. The rotations are massive, though, right? So what are we going to look for tonight? Tonight, we've got this stop here in the J low. We have London that's going to open now, right? And because London was closed yesterday, let's see what kind of reactive move we get. Because right now our inventory is long, right? There's yesterday's close. All of the trading, except for this little chunk here, is above the close. So it's already corrected down from the highs of the overnight. The question is, are we going to correct furthermore and come and take out the stop here? Oh, we have stops here at J and W. So how we trade this market is we wait to see if it can take out the lower stops. If that next period opens, right? When L opens, if it can't take out the stop at the J low, the trade will be to the upside, and we're going to take the stops in K, J, and I, depending on the order flow that comes in. Now, does this make sense? I'm going to stop here for a moment. Does that make sense to you guys? Cool. Okay. Right. Take a look. This is that inventory we had from yesterday, right? Our cost basis is around 4110. I'm not, sorry, 4140, right? Our cost basis of yesterday is all underneath 4140. It's from 4104 up to 4140. So if this market sells off, the size traders will sell this market down, first down here to this cost basis. And then if that breaks, we come to this area here at 4140. Okay. So that's what we need to be aware of. The market has been above VWAP all night, hit the second standard deviation, sold off. This inventory here is long, right? This chunk of inventory is long and it is being sold off down here. If we get more selling, we'll take out this 4150 area and come down to this first standard deviation to the lower side, okay? And that's going to correct inventory into this cost basis, right? So we know where the inventory is using candlestick charts, and we know where the stops are using structure from TPO, right? See how we're just going back and forth above VWAP on that 1 minute hitting here, right? So now we're coming down. We're going to test that K low and the J low, right? The short sellers who are short from yesterday, let's see how short they are. Because you know for sure people are short underneath 4,100, right? Now, Tony, where are you? Let's talk about the shorts. Where'd you go? You still there? Oh, he's gone. Okay, so now let's talk about the shorts. Okay, what do we look for when when these stops, when the price comes close to these stops, my friend? That's when we think about the shorts. Okay, because they're trapped in this move here, right? That M low is a big, big low, and that's what we're going to be looking for today in RTH, right? Is that 4121 area, right? That's also the point of control from yesterday, right? The shorts are trapped underneath that low all the way down into this area because when the market came down here, they were pounding on it down here, right? And how can I tell? Because I can tell because I get paid 150 grand a month and a million free shares to trap shorts. That's my fee. And people play it very, very willingly, right? So I've been trapping shorts since 1996. People will call me in to a company to manipulate the stock to do a short squeeze. And you get paid really well for doing that. right? So watch when you look at the lower stops, that's where you're looking for the shorts to come in and buy because they will be expecting selling at these levels. Therefore, they will be bid at those levels, buying to try and cover. If the market cannot take that J low stop, it means there's too much buying pressure at these levels, whereby there's not enough supply from overhead to fill the buyers at lower levels. Okay? So what I'm talking about is this is long inventory, it's correcting. The shorts, Tony, are the ones who soak up that inventory. No, Tony, there's not enough short selling to create supply. Okay? Supply only comes from longs. The days of selling big size short is gone, right? Those big short traders, you're thinking 1995, 96, up until 2005, right? In 2005, they changed the rules, right? They introduced something called Regulation SHO. It changed the business. So there are no more large, opportunistic, predatory shorts that will come in and short 500,000 contracts into a market, right? Or they won't come in and short 1,000,000 shares of Apple. That's just not done anymore because you can't borrow that kind of paper, right? The economic cost to borrow stock now is massive, right? The capital requirements are insane and it's stupid because to do that in a market with no supply, you might as well just take $100 million, set it on fire and have a nice bonfire, right? So shorts will never add to supply. Yes, 2005 was the end of naked shorting, right? That creates a change in the dynamic of business, right? You cannot short sell a market unless you have a borrow, right? It's very difficult and completely uneconomical. It doesn't make business sense, right? If there's 50 million shares of a stock, 40 of it is taken and put into hands of people who aren't going to sell it for 30 years. Why would you take a huge short position in that? Unless you have insider information that the company's cooking the books. Okay, now here we're coming down to that J low, right? Let's see what it does. I expect that it'll break, right? And I want to see the response when it breaks if we come down to this level here. Now, I'm not going to short this because I want to see the response because it's the morning, and I want to see the response so I know how to trade the rest of the morning. Does that make sense? Right? A lot of people will just come into the market and start trading. I like to look at the market and see what's actually going on before I jump in and start putting money at risk. Exactly. It's like looking across the street before you cross it, right? It's just common sense, right? Yeah, Kiawi, some will cover at a loss. The larger traders will hold because they have the capital resources to do so, right? And they'll trade around that position. So if you're short in one account, they'll go long in another to offset that. But we don't do stuff like that because we're retail traders, and generally retail traders only trade one or two accounts, right? So now we're going to come down. We have 4 minutes before the London Open. So let's see now if we can take out that JLo. I have no idea, Suresh, right? That is completely, I won't even look at that because all I care about is the JLo. All I care about is the price action in the market that I'm trading. I want to see if we take out J and come back up above it, or if we take out J and continue. Does that make sense? I don't look at any of that stuff, right? Oftentimes, London will correct inventory lower, right? The momentum traders will grab supply at cheaper prices and then move the market higher, right? So now I know company earnings are important and I keep that, but it doesn't affect how I trade. It might help me manage my expectations, right? Because look at Amazon, that crappy earnings, and it's not a liquid stock. So now when L period opens now in 3 minutes, right? Here's the thing. Will L period take out that K low? Because we ran the stops in J and now we're back up into J period. So a lot of people will go and buy this right away. But what if London opens and takes out that K low? You're going to get stopped out, right? So what I'll do is I'll wait for confirmation, right? So if you're short from VWAP at 41.58, 59, right? I'm looking to see whether the market will take out these lower stops. If the market, say, comes down to 45.51 and can't take out that A low, then I'll cover some of my position and book a profit. The fact that we took out the J low and found some buying tells me that there is some responsive buying. There are shorts that are coming into cover there, right? Does that make sense? Because you expect buying here. When that breaks, they come in and grab that supply. If I separate out this profile period, you could see under J, do you see the absorption, right? It's 3 o'clock in the morning. You see 200, 155, 110. Do you see that? That's short covering. Who's buying size at the bottom of a letter period? The shorts. Does this make sense? You could see it, right? It's like taking a candle and opening it up so you're doing an autopsy. You can see exactly what's going on inside the candle, right? Look at all that size here. I mean, that's not a lot, but it's 3 o'clock in the morning. So someone's covering off 2, 3, 400 contracts, maybe 500, right? There is supply above. So now what we're seeing is that supply enough to fill this, to satisfy the demand of the shorts who are buying here, right? The short, so you got to let that trade itself out, because if you jump in and buy it, you don't know whether or not it's going to stick. So you wait for the next letter period. You only got to wait another 60 seconds. Boom. There it is, right? So let's split that out. Now, can you see? Because if these shorts see that there's supply, they'll drop their buy orders and try and buy it down here at 53. If there's no supply, this is what happens. So that low and that low line up exactly, right? So give it some time. We still have all of this supply above us, right? Oh, one precedes the other, Dan. Good question. The shorts are always the first ones to buy. Then once wholesalers see that once wholesalers see that that price is stabilizing, because the wholesalers see the incoming order flow and they sell to the shorts, right? So the shorts are buying here, but they see that there's supply, so they're dropping the market, right? So the market is now dropping because the shorts, if I was bid here and I saw 200 contracts, oh, I'll buy them down here, see? Right? And that's why the market is now coming down to that A low, right? This is often what happens when London opens. It corrects down, takes out the stops, and then goes back up. That's why you wait, right? There's some absorption there. That's short covering, right? So the large wholesale traders are selling that to the shorts from the people who are buying it, selling it down, right? So there we go again, right? We stopped right at that A low. No, 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 don't overreach. That's just order flow. That's just order flow, right? Just watch the stops. Don't that wiggle is just different orders coming in. It has nothing to do with wholesale absorbing. Okay? Wholesale will restock when they run out of supply and they see the short sellers bids are coming in, right? There's that standard deviation. So now we took those stops. Where's the next set of stops? Down here, just underneath the close. Dan, you with me? Cool. All right. So we took those stops. We couldn't get down to the close. Now we're creeping up against that first standard deviation. Let's see if we can get to 52. And this is where you use my levels on a 1-minute chart because we're going to try and absorb this inventory down here, right? So just like I said it would, London took out the stops. The short sellers came in and started buying. So now the question is there enough supply to push this thing under 41.48? Or what's the next sort of course of business? Let's see what happens, right? I want to see if that I low can hold. The market comes down, Dan, and as soon as the short sellers find out that, see, what you do is if you're a short seller, Dan, I put in a bid here for 100 contracts, right? And if I only get filled on 50, I know that there's no supply. That's how big traders trade, right? They use stuff like profile, but not everybody does. What they'll do is they'll look at a level, they'll put in a bid, and if that bid gets filled, right? Say I have to buy back 500 contracts, I go to buy 100 here, and I get filled right away. Then I'm going to put my other 100 down here. If I get filled right away, I'm going to put my other 100 here. Does that make sense? Now, if I go and I bid here at 50 for 100, I'm 100 bid 50, and I get filled on 25, then I got to creep my bid up. Does that make sense? That's why the triangle moves the way it does. So now they see some supply. I'm looking for a print at the close here. Let's see if we can get down here. See how little volume is being absorbed on the way down? Right? Do you see how little volume is coming down? The close is the O close, Raj, at 41.46 quarter. The volume is coming down, right? There's no absorption yet because the sellers see supply, so they're not going to step in there and buy a lot. Once the supply starts running out, then the market creeps back up. We came close to the close. Now, short sellers are front running the close. When they see supply, they will drop their bids and will break the close, and the next set of stops will be the U low here. Okay? See? And then the next set of stops will be the T low. Right? This market has a habit. In the old days, in the last couple of years, we would have broken this stop and ripped back up, and people would have been buying here. Now this market takes out pretty much every single stop it can. Why? Why are these stop runs bigger and more violent and more drastic? And you have to wait and be patient before bingo, because we got supply. There you guys have it. So when you know you have supply, we can manage our expectations, and we're not sitting there at 41.56, right? We're not sitting there, right, like suckers trying to buy this bounce, right? We know to wait, right? Hell, I'll wait. If I miss a trade, big deal, right? Because this market doesn't have liquidity, okay? Especially at 3 o'clock in the morning. This is called situational awareness, right? How many people are going to buy a lot of product at 3 o'clock in the morning? Not many, because most people are sleeping, right? So you understand what time you're trading so you can manage your expectations on how much oomph this thing's going to have, right? So you're not expecting a 50-point rip at 3 o'clock in the morning, right? You're expecting stops to get taken out because we have supply. It's 3 a.m. Short sellers know that there's supply and they're the only buyers. Is this making sense? I'm going to pause for a second. Does anybody have any questions? This is really important because a lot of people are dip buyers and they get taken to the cleaners because they're trying to buy the dip too quickly. It's happened to me, right? I'm not above any of this, right? When this market broke, I had trouble because I was trading too early and getting stopped out. Yeah, right? You got to manage your expectations for the time of the day and the supply conditions that exist in the market. That is what we call good business sense, right? Good business sense helps you keep your head on your shoulders, right? Because you understand that there is supply. You understand that it's 3 in the morning, right? So like if you're selling Mercedes Benzes, you're not, and the dealership's open at 3 in the morning, you might sell one car, right? There's not a lot of people coming into the dealership at 3 a.m., right? Just business sense. Snoz, I'm looking for levels, Snoz, right? Now I might have missed that L trade, and that's okay. But that gives me a lot of information about how to trade for the rest of the morning, right? So a trade you could have taken here, right? And I didn't call it out because I was trying to get you guys to understand. Instead of calling out trades, I'm trying to get you guys to understand what makes a trade. So buying the close with your stop here where that stop was, right, is a good long, right? And if you're long, you're long to the next set of stops and then half back is up here, that's probably your out, right? I know we're a learning room, but a lot of people get pissed because I'm not calling trades. But I'm trying to make people understand when to buy the dip as opposed to buying it and losing money, right? And I just wanted to make sure that this got clear because as we go along, right, I'll call out more trades, right? But I want you guys to have a foundation in why the trade is going to work, why it's not going to work, what are the conditions that make that trade work, right? Because a lot of trading people say, oh, you don't know what's going to happen. You just got to put on the trade, which is complete BS. It means they don't understand the market. Nice work, Suresh. Coffee time, brother. Coffee time. And just, just take a breath now and just hang on to those 3 points, okay? Now we had a correction. We went back up to VWAP. That tells me we've cleaned up this inventory underneath, right? Now we got to VWAP and we know that there's going to be a seller at VWAP because that's the business model of US capital markets. to buy under VWAP to sell above VWAP or at VWAP, right? So now it corrected inventory. This is the counter move, and this is the next counter. So now it's just going to bop around in L period, depending on what kind of order flow comes in, right? Nice trade, Sandy. Beautiful, beautiful, right? Because you know there's going to be sellers there. So why don't you join them? Join the party. Order flow is random, Francis, right? Trades have outcomes. I'm going to put it to you this way. Nothing that happens in the stock market is random. People talk about this random stuff, but if you put $1 billion on the table, the agendas that surround that $1 billion have nothing to do with randomness. People just don't willy-nilly. The people who create order flow that you trade have an agenda. Nothing just like people who have billions of dollars, they're just not out there just, oh, I'll sell 1 million shares, I'll buy 1 million shares. That's not how it works, right? There's an agenda that creates the order flow that you trade, right? Every war is won before it is fought. I don't know, Raj. It's too early to tell, right? Remember, Dalton says one day does not make a market. No, it's not really strange, right? Given that we have momentum-based selling, momentum-based buying, so those levels like my 40.54, 40.56, it held, right? It's not really strange if you really think about it. Francis, are you okay with that? Because I've done 200 deals in my life. I've taken 200 companies public, and there's absolutely nothing random about what I have done in 30 years of making markets, right? You know, we have an agenda, right? And the agenda is to distribute. You got to remember, what is the stock market? The stock market exists as an exit mechanism for early stage investors to exit their investment into the liquidity of the retail flow, right? For a profit. When you take a company public, you sell your shares, right? You are exiting your investment. Whatever happens in the aftermarket, you don't care about, right? That's what a lot of people don't understand, right? Once we're gone, see ya, wouldn't want to be ya, right? I have 100 million shares for sale, right? I'm gone. Whatever you guys do with it, have fun, right? I'm out at 50 cents. I got my $50 million dollars. Thank you very much, right? It's a way to cash out. That's the smart money is getting out into the retail flow. And I don't mean retail, just us. I mean prop traders, anybody who will buy it. Hell, they'll sell. When I'm selling stock, right? When I'm working on a deal, I don't care if your grandmother's buying. I'll sell to her, right? I'll sell to anybody, right? You put up a bid, I'll hit it, right? I don't care. Just keep the buyers coming until I'm out of my stock. That's all we care about. My clients, when they call me, they ask me two questions. JJ, what was the volume? It's 10 million shares. How much did I sell? 3 million shares. Have a good night, kid. Click. They don't even care about the price, right? Because if the stock is $3, they paid probably less than 2 cents for it. Does that make sense? Right? If the stock is $30, they may be paid $3 or $4 for the stock. So I sell it at anywhere above $3 to $30. They're happy as long as they got cash in their accounts. Sure, they'd like to get more for it, but they understand is you sell where the buyers are. And that's why we sell into strength. So what's next? Now, L period took out all of those stops. What's our volume tonight? 75K. It's not so bad, right? So we're just hanging around, right? We got into the excess of yesterday, just basically bopping around in yesterday's range. Where's the previous day high? All the way up here. Yeah, our T+2 high is way up here at 42.65. So the rotations will be larger. The inventory adjustments will be larger. So you got to govern yourselves accordingly, which means you have to be prepared to wait to trade the edges, especially if you have a smaller account. Okay? For folks who have smaller accounts, you really, really, really got to pick where you're going to do business, right? Does that make sense? You just can't trade willy-nilly all over the place. Okay? If you have a smaller account, this market is going to be very challenging to trade. Even if you have a bigger account, there's no use like just blowing dough, right? Oh, I've already got that done, right? You really, really, really have to pick the areas where you're going to do business. And guess what, folks? If you miss a trade, who cares, right? There's going to be another one coming, right? There's always another trade. Sorry, I didn't have my references in place. So we are basically the value of the overnight is above the value of yesterday, which this is a distribution profile, right? So do you see how the candles are getting tighter here? So we're going to try and because we've been above VWAP all night, now's the time to clean the market up, right? We got to take out all of these people trapped above 4156, right? We got to flush the market back and forth, acquire all of this before we get back up over VWAP again. And the only thing that will help that is the order flow that comes in. If there isn't any stiff buying in this thing, we'll come back down to 41.39, right? And test 41.36, which is a big level for us. Okay, going forward, here's something that you guys have to look forward to too, be aware of. That T+2 close and the T+2 low, especially 41.18 quarter. Okay, if the market stays in T+2 range, it means we will hold settlement, right? What does that mean? That means we won't have any margin call selling, right? And as the week goes forward, that low from yesterday at 40.56, right? If that holds, then the market will start rotating back up, of course, depending on Fed and Schmed and all that stuff. But how this market works is if we can't break 41.36 like we did here, we rotate back up to the next level, 93, 72. Couldn't get to 43.17. We sold off. We broke 41.36. We looked below it, failed to get to 40.15, and ripped all the way back up. Does that make sense? We're not going to have any margin calls, right? Margin calls are like stock repossessions, right? A margin call is a large trader who buys on credit, and if the market doesn't hold, right, the low of the previous 2 days, the guy who extends him the credit is going to go, I need my money. So they will sell the stock. So if stocks hold settlement, right, if the stock can hold settlement, like here's Tesla, here's Microsoft, right? If the stock can hold settlement, that means there's not going to be any just random selling from trade desks. Does that make sense? Cool. All right. And that's how you manage your expectations so you don't get short in the hole, right? That's a part of the business that you got to understand. Cool. Hopefully this helped you guys. I know I was very, very sort of verbose. I was, I talked myself out, right? I apologize for that. I'll be calling out more trades later, but I like to use this morning session, right? I like to use this morning session to teach, right? Because it's slower and it gives you guys the ability to ask questions, right? And I don't think in my trading room there's no question that is too. There's no stupid questions, okay? Everything has a purpose, right? 41.36, right? And then this 40, the T plus two low, Sandy. Here, I'll draw it up. Hang on. Here we go. Any other questions? Whoop, Apple. These large moves, do they originate from under? They do. They do. Underlying stocks in the S&P snots. But I started putting these T+2 levels on the ES chart, and you'll be surprised how accurate they are and how well they work. We're the only trading room who ever talks about T+2. Ah, uh, yeah, basically. Right now, I see how it went up to above VWAP and came back down. I'm expecting it to go back and forth over VWAP. Why? Because we spent the whole night above it, right? So yeah, when it breaks that level, it will have rejected it. If we get over 60 and start trading 60 quarters, 61, and it sticks, right? Now, acceptance or rejection, Dustin, depends on, right, your time frame, right? The legal definition of acceptance in market profile trading is 2 half-hour periods, okay? But that's for people who trade longer time frames, right? If you're taking a 5-minute trade, 2.5, an hour is not going to work for you, right? You don't trade the levels, Benny. Sometimes they are tradable. In this market, be careful because we could break them and come back up over them, right? It's to read inventory and sentiment. Yeah, I don't know why nobody talks about T+2. T+2 is the foundation of the U.S. capital markets because it has to do with settlement of equities. I pay attention to it because I used to work in the business. And when I started in Vancouver, it was T+13. And you didn't even need to have money in your account to buy a stock. You could buy a stock and not pay for it for 13 days. How freaky is that? Only RTH levels, Wes. Look at the thing I posted in Discord. I'll just scroll up. Oh, almost posted a picture of Hawaii. Hang on. A lot of 13 days? Yeah, that's why my nickname was the director of dirty tricks. Could you imagine if you had 50 million shares or even 5 million shares of a stock and you had 13 days to pay, you open up 50 brokerage accounts and trade between them to show the appearance of activity. People all jump in and you sell them the stock. It's called wash trading. Anyway, we're not supposed to be teaching you guys bad stuff. All right. Any other questions before I got to go? My pleasure, Sandy. Have a good morning. I'm going to let them clean this up. Go get a walk. Yes, I was a bouncer in Vancouver before trading. Yep. That's how I got into trading. It's a great foundation. Thanks, Tony. Thanks, Betty. I'm trying to be a better teacher. I've learned a lot in the last couple of years from you guys. It helps me. That's why I ask you guys, keep asking questions. There's no such thing as a dumb question. And if you don't understand anything, um, please ask me to explain it in different ways, right? Thanks, Nas. Thanks, Tony. Are you clear about that now, Tony? If you aren't, DM me. We'll chat about it. Okay, brother? Have a great evening. Get some sleep. I'll see you guys in RTH. Thanks for really being with me. I really appreciate it. Okay, bye for now.